into ledger accounts. Take our example, a debit to cash and a credit to revenue. We post these to their respective T accounts, debit on the left, credit on the right. Every journal entry must be posted into individual ledger accounts. The left side is debit and the right is credit. Now draw this in your notebooks. Purchase goods on credit from ABC Suppliers for 80,000. Now, what's the difference here compared to a cash purchase?
Sir, is it that we don't pay immediately, so it's be credit accounts payable?
Well done. Now it's time to record real business transactions like a professional accountant. So for this transaction, we debit the office furniture account and credit the cash account. Let's fill that in. So the owner starts the business with 500,000 rupees cash. This means our cash account is debited and the capital account is credited. Let's see why. Now it's time to record real business transactions, like a professional accountant. All right, here are 3 transactions. Please record the journal entries in your notebooks. Take your time. Good, that's correct. Keep going. All right, let's post this journal entry to the ledger. Cash debit 500,000 rupees. To capital 500,000 rupees. We debit cash and credit capital. See the T accounts? So, debit is on the left side. Does everyone understand this?
Yes, sir. Left is debit.
Exactly. And credit is on the right. Good. Let's move on. Now, for our second transaction, furniture is debited with 50,000 and cash is credited with 50,000. Watch the accounts update on the board. See, cash balance decreases, furniture increases. Yes, sir. So, as you can see, we start with the opening balance, deduct the furniture purchase, and this final figure here is our closing balance. Please calculate this along in your notebooks. In the next lesson, we will prepare the trial balance using all ledger balances. Today, we will prepare our very first trial balance using the ledger balances from the previous lesson. So, remember, only the closing balances from each ledger account are entered into the trial balance. This is the key step to ensure our debits and credits match. All right, let's see the complete accounting flow, from the business transaction all the way to the net profit. In the next lesson, we will prepare the balance sheet and understand the financial position of a business. Now, we total both sides of the profit and loss account. What's the final result?
Net profit, sir.
Correct. Net profit transferred to capital account. Profit increases the owner's capital. Now, let's add other income to the credit side. We have commission received and bank interest received. These increase our business profit.
So it goes on the credit side?
Yes, exactly. It increases the total credit.
Thank you.
Now let's enter the operating expenses into the debit side. First, salaries expense 15,000. Next, rent expense 8,000. Then utilities at 3,000, 1200 and office supplies at 2,100. Let's build the profit and loss account on the smart board. From the previous lesson, the gross profit automatically appears on the credit side. Now we'll add our expenses on the debit side. Salary, rent, electrician, commission, office expenses. Now we will use our gross profit to calculate the net profit of the business. First, we take the gross profit from our trading account. Then we subtract all our operating expenses. This gives us the net profit. Here is our completed trading account with the gross profit circled. This gross profit figure is transferred to the profit and loss account. In the next lesson, we will prepare the profit and loss account and calculate net profit. Let's build the trading account. We'll start with the debits. Opening stock goes to the debit side. Next, purchases and carriage inward. Now for the credits, sales and closing stock. This gives us our gross profit. Let's draw the trading account format. On the debit side, we have opening stock, purchases and direct expenses. And on the credit side, we have sales and closing stock. Compare this format with your notes. Alright, let's look at lesson 7. We'll use a fictional business, Sunrise Traders. Here are the figures. Opening stock is 100,000, purchases 400,000, sales 700,000, carriage in 20,000 and closing stock 100. Please copy this down. Today we will prepare a trading account and calculate gross profit using a real business example. Let's say a company has sales of $100,000 and a cost of goods sold of $60,000. Let's summarize the complete accounting cycle. It begins with a business transaction, which is recorded in a journal entry. This is then posted to the ledger and a trial balance is prepared. In our next lesson, we will prepare the trading account.